Hey traders, I'm going to use market webs today, version 3. Give a quick rundown of where we're at in the markets and some things that I'm looking at, what I'm looking for here in the markets. As you can see on the monthly time frame, I'm using the yearly webs, and it gives you the yearly volume profiles. It just gives you some idea just how massive this run up has been in the markets. Now I'm going to zoom into the past 3 years here, give a better idea of what we're currently at. And as you can see, as we came up in this volume profile, we've got clear multiple distributions that have happened back here in the year calendar year 2021. Okay, so we've got multiple distributions. So you have multiple uh, 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 distribution lows, distribution highs, and intermediate volume point of controls in back in 2021. And I have identified three different levels that happened back in 2021 with the blow off top that hit the markets. So last year, what we did, we backfilled this blow off top area from the 2021, and we technically built out value in theory. Okay, so we backfilled a lot of this poor volume profile, came down to the 200 monthly moving average, and bounced and found support. Okay, and what we did notice, there are some monthly distributions here lower. I didn't draw all those out like I did over here, but currently where we're at is up here in this upper distribution from last year. Okay, so still a very bullish looking chart pattern going forward here, and so definitely keep that on watch here. Uh, so I do want to point that out here on the yearly time frame. Now, on a yearly basis, our main 330, 33. This would be our main untested virgin point of control. So, if the markets were to have a major correction, lose the 200 monthly moving average, that would be our primary target, the 330 area here on SPY. Now let's go down in time frames. That's how you do it with market webs. When you go down in time frames, then you go down in the volume profile are based on monthly now instead of yearly. Okay, and I'm just going to focus in on these past 3 years here. Okay, and what I do have going on here, the blue lines right here, these are virgin point of controls, and they stay valid until price finally comes back down, touches it. It doesn't even have to technically go past it. It just has to touch it uh, in a in the current month that it's created, or in any further time frames in the future. And a lot of these have been satisfied. And so what we did uh, the past few months here, we have satisfied this virgin point of control that started way back in May of 2022. So on the monthly time frame, we have satisfied the untested areas of value on volume point of control. So, so basically this distribution zone right here, we have satisfied that both for 2021, 2022, and now 2023. We have satisfied it 3 years straight. Okay. There's no reason to think that we're going to continue to go higher, but we can. There's most definitely a chance that we can. Okay. Uh, I do want to point out here, we did not have an untested volume point of control when we came up and we did this blow off top back in 2021. So that's why, in my opinion, we're having so much trouble going any higher because, the bad profile has been repaired. And even though we have a double top here, you know, uh, you know, uh, uh, we're literally lifting off into a whole different trading atmosphere if we go higher, okay? Because the topping area has completely been repaired, and that's why we're having so much trouble pushing out, okay, on the time frames. So, just be mindful of that. And one thing I did notice here, I did not mention that on the weekly, 5-year weekly. Let's go here. You see how we put bill at this value, even distribution, okay? And then we started the first part of the year out down here in this lower distribution area. And then all of a sudden we had an explosive move back to the upper distribution area the current year. Okay, so it went from, in relatively short time, we went from, equilibrium from the end of last year, now all of a sudden they're trying to push to the upper side of the range. Well, that leaves a massive volume glut below us here in the current trading year. Okay, so this is an unrepaired value area to be mindful here on the weekly time frame. Now, if you go back in the daily here and you see the monthly, I got that oval right here. And if you zoom in, what's going on here? Okay, we got a gap down here. Okay, and so you just have to be mindful of that gap going forward here. And if you go auto zoom, let me see here, down here to the lows. Let me zoom in here in a second here. I've got these channels right here to represent uh, very critical support areas. And we have not even entered into that testing phase area yet. We came down to it. We just came right to the edge of it Friday, the testing area for a downside bearish test. So be mindful of that. We're right on the cusp of breaking out of the bullish scenario. Uh, looking for a much deeper bearish test. So be mindful on that. Now, if you do go to the very edge of your wicks here, this will create you a wedge formation right there. Boom. Okay. And so this area right here has not back and filled yet. Like I had mentioned, we've had this blow off top into this area right here. So be quite mindful of that. Uh, uh, and we have an untested monthly virgin point of control down here. So on the upside, all the monthly stuff has been satisfied. All the yearly and all the monthly stuff has been satisfied. This was the last monthly profile that had needed to be repaired, which we have repaired. And as you can see right here on this channel, we came down here, got this low here, and the channel worked out perfectly. And you see this high right here? I think there's a weekly volume point. Now I'm on monthly right now. You use market webs, you go down to 1 hour next, and that gives you the weekly webs. Okay, and this shows you on a weekly basis the volume point of control. Let me get this up to 360 days that have and have not been tested. See if that comes up here. And what I want to point out here, you see that channel there? I drew the channel based off of this low right here, but it's quite amazing. We had a weekly volume point of control that was never tested. And they reached up into that right at the top of this channel and rejected. So this is a very strong confirmation of a bearish continuation pattern. So I do want to point that out, how perfectly this rejected on the weekly time frame. Now on the downside, the weekly time frame, many of these areas have been repaired in current trading range. So basically, we're going into the apex of our trading range here, and everything inside of even the lower channels there, everything inside of this channel has been repaired. So be mindful on the weekly time frame. Everything has been repaired. You got to go down to even smaller time frames like the daily webs to actually find anything that has not been repaired yet. Okay. And so, on a weekly basis, we have to start thinking that we could actually be looking for a breakdown and retesting this downward trend line. You see, this is a channel. Okay. We have to start thinking that now we are going to be coming down here to the 428 area to do another cycle of the downward channel. So be quite mindful here. That could very well be what we're doing, because there's an untested weekly volume point of control, the same area as where this channel low is. So I love it whenever you see the synergy of multiple things. So this is my primary thesis, that we might be coming down to the 427, 428 area here in the not so distant future. Okay. Now I can go down to the, say, 30 minute. I think the 30 minute will do it. Yeah. The 30 minute gets us down to the daily webs. Okay. And let's get a little bit longer time frame here. See how far it'll go. Okay, guys. So I put our 360 days on here. I want to point out here. See this apex we got going on here? We do not have anything on the daily time frame that has not been satisfied. So we are set up. We are prime for a breakout of the wedge, one way or the other. We are absolutely prime for a wedge breakout. And once they've satisfied these untested volume point controls, that's when you have to be very concerned of a much greater move in the markets, and that has happened. Okay, so that's weekly webs. I'm sorry, that's the same thing before. Showed daily webs a second ago. I must have went too much time frame. 1 second here. Let's go to 30 minutes again. And we'll go 60 days on that time frame. Sorry about that. Let's go 180 days. Is it going to stay this time? Okay, yeah. Okay, there you go. Same thing. It's still valid. Yeah, we're still 30 minutes. Okay. So my thesis is still valid. We're on the daily webs. Every one of the volume point controls have been satisfied in this wedge. Okay, that's why I was trying to get at. That this is very relevant. Okay, and what we've done here in this trading range on these yearly webs, because this was a volume distribution on the yearly time frame, we are at that volume point of control on the yearly time frame. At right here in the pre-market. If you go down to like the 15-minute time frame, you'll see we're opening right on this volume point of control. So basically, we are at the highest point of this trading range, on the yearly time frame. So it can go either way. It's really a very difficult chop area. So what we want to do coming into tomorrow, we really want to see a confirmation that we're either breaking down below Friday's lows or uh, a confirmation that we've recovered this breakdown and we are migrating higher. So right here, right now, this is the most dangerous place which we could be playing going into tomorrow. Okay, because we have not broken down any of our critical supports down here. We came down to it, but we held all these critical supports. We're holding this volume point of control. Uh, Very dangerous area to be trading in the markets. So in my opinion, we're probably going to have quite very light volume going into tomorrow's open because this is so uncertain exactly what's going to happen into tomorrow. It is nice that here on the 30-minute we are above the 20 SMA. That a little bit of a takeaway. But in my opinion, it's not something you want to get excited about going into tomorrow's trading session. I don't, barring some news event to take the global markets down. I don't see any type of edge going into uh, tomorrow's session to take any type of directional trade, in my opinion. So I'm on the daily webs. That's the smallest it gets, but you can go down to smaller time frames as well. Uh, but those untested volume point of controls, those I've already told you, everything inside the wedge we're currently building has been satisfied. So all the way down to daily, so unless we build some new ones out intraday this week, uh, that will need to be that should be tested intraday on a intraday weekly basis. Like we can come down, uh, gap up tomorrow and not come back and back test it. Okay. So our volume point of control, we know going into tomorrow is still above us. So if we gap down or if we stay down here and don't back test this, the 444.46, then that's going to be a new untested volume point of control to the upside. So that's the primary thesis uh, going into tomorrow. Because even if we cross this, uh, uh, at any point, you know, in tomorrow's session, then that's this purple line, untested volume point, that's all going to be taken out in tomorrow's early on tomorrow's session. So, so that's definitely something to keep on watch here. Uh, so that is the one thing that we might have an untested volume point control ahead of us, and we're just falling apart in the overnight session. So the odds right now favor shorting the market for our hard test of our trend supports, and there's a lot of supports down here. Uh, so the odds favor that slightly. But like I said, on a yearly time frame, this is the area of very mixed contention. A high volume area, the Bulls and Bears tug of war, area right here. So be very mindful of that in tomorrow's session. So that gives you a really a quick rundown of the SPY. And if I have the time, I'll do Qs here in a minute, but I want to do that in a separate video. But if you guys have any questions on any of that, let me know. But like I said, how I drew these levels, I just started on the weekly, anybody who's using this study. And then, like I said, I just went over here, you know, we know this, and I just identified which areas like activate. You see a high volume right there above. I just put, that's a high volume node right there. And then this acted as support and this acted as resistance. Okay. That's how it's really simple. And it's just like, you zoom in right here, same thing. A lot of volume right here at this price point. A whole lot of volume right here at this price point. So basically we could have just came up to this line, rejected for the back test, which we've done it for 2 weeks straight now. Maybe this week we might break out. I don't know. There's always that chance that they're still wanting to shop for higher prices. Uh, but the odds right now look like that they've satisfied the upside, and seasonality wise, going in October tends to be pretty bad. So I don't know. We got the Fed this week. They've only expecting a $60 move in the S&Ps, which is ridiculously low when the Federal Reserve is reporting this week. The data all suggests we're going to have a quarter basis point hike, but the markets do not seem to think that's going to happen. So you know, and the bias is in a bearish bias right now. So if they were to come out with a quarter basis point hike, I'm telling you guys, we're probably going to be breaking out to year highs at maybe even before the Fed reports, breaking out to year highs on the 2-year interest rates. So be very mindful of that because the bonds look like they're ready to fly. The, Crude is above $90 a barrel. And another thing, one final little takeaway I want to finish my thing off with is the dollar Dixie. This is what really bothers me. Okay, guys, you see this rapid move we got going on here in the dollar. We're at $90 a barrel right now. We're at 30-year lows on crude inventory in the national reserves, back to the 70s, because the Biden administration has just kept pulling inventory out of our national reserves, which all has to be refilled at higher prices. Okay, the higher cost to the federal government to replenish all that inventory. But what bothers me is this massive run up in the dollar, and what happens whenever you have countries, if you have countries like China, Russia, uh, Saudi Arabia, and if they were all of a sudden to start dumping their dollars, what's going to happen? Crude's going to skyrocket. In all likelihood, $90 is going to be a far distant cry. So and we're in a seasonal bull. We're in seasonal bull area for commodities, and energy commodities, nat gas. Before the very first cold wave, nat gas tends to rally hard into the very first cold wave of the season. You tend to have crude oil tend to have a bid this time of the year and stuff, and we have a lot of reasons in the supply chain to suggest that this could be a problem. So what I'm looking at right here, you see the trend I got going on there, and I don't know how far they can take this, up, but what I'm looking at right here, and unfortunately I can't put the volume profile on this chart, but what I'm looking at right here, uh, you know, we had the potential to continue to go higher into these March highs. Uh, but if you put fibs on there, a fib extension from right here, and if you zoom in here real quick, so what I want to point out here, the 61.8 to 78.6, this is a critical reversal zone, potential reversal zone. If you use Fibonacci retracement, this could be a very critical reversal zone uh, going on here in the Dixie. So I really, really want to be watching the Dixie this week. Uh, Everybody and their brother have been parking their money in US dollars. And if this thing starts to unwind, uh, this could be really bad. Putting major inflationary pressure in the global economy because most commodities are based in U.S. dollars. So I think that's one of the main reasons they've kept this thing alive because everybody knows once the dollar starts losing it, it's going to really mark a corrective phase in the markets. So just food for thought. Okay, guys. Please like the video if you like it. Leave comments below if you can. I really appreciate any insights you guys got that maybe I'm not seeing. Thanks a lot.